Welcome to our exam review for Chapter 4. What you will see here are our sample questions. So what I've taken here is from your pool of questions for your exam. I've actually taken some of those very same questions so you have a representative sample of what you'll see. Let's start by reviewing bank reconciliations. You should review these two slides thoroughly because lots of this information will appear in the theoretical portion of your exam for Chapter 4. So we can recall that we have our bank balance, right? Our balance per the bank. And then we have our book balance and we add and subtract certain items. So now to this book balance, we want to add EFT, which we know EFT is electronic funds transfer of any receipts, because that's why we're adding it. And then payments we're subtracting. Then we have collection of a notes receivable, and we're also going to add any interest that we earned. We also are familiar that our deposits in transit are added to our bank balance because they represent any deposits that have been recorded on the books, but they're not yet on the bank, so hence they're in transit, so we're recording them. Also keep in mind that bank errors can be added or subtracted from the bank balance when you're preparing the bank rec. More information, now we've done a lot with the bank balance, so let's look at our book balance. We know NSF, non-sufficient funds, checks, those would be deducted. And that represents a check from a customer in which there wasn't enough or sufficient funds in that bank to cover it. So that's why we're subtracting it. Also, if we do an EFT cash payment, then that's deducted from the book balance. And then you're also deducting any service charges for printing checks. Now, we also know from segregation of duties, right, and internal controls that the person who prepares the bank reconciliation, they shouldn't do anything else with cash, right? We have those checks and balances. So now let's go through some questions that you will see that'll give you an understanding of what's on the exam. So first, when we are preparing a bank reconciliation, which of the following items should be added to the book balance? Make your selection. And hopefully you note that your electronic funds transfer receipts and collection of notes receivable should be added. Your deposits in transit are not added to the book balance. Those are added to the bank balance. So make sure you read because unfortunately sometimes those words are a little sticklers there. Moving on to our next question, Johnny's company, they deposited $25,000 in its bank on the same day as, but after the bank prepared their bank statement. So this deposit should appear on the bank reconciliation as blank and is called. So we have here I'll let you make your selection. And hopefully what you came up with, this is a deposit in transit, and since it is in transit, we should add it to our bank balance. Now let's move on to another representative example of what will be on your exam. So the bookkeeper recorded a deposit of $100 as $10 on the bank reconciliation. This would be a blank. So the first thing we have to do is figure out the difference, right? So we know it's $90, and since this is a deposit, we know we're adding it. So in this case, we're adding it, and since we recorded it wrong on our books. So hopefully you've got that you're going to add the $90 of this balance to your books. Let's move on to the next one. So now, if a bookkeeper mistakenly records a disbursement of $47 instead of the correct amount of $74, the error should be shown on the bank reconciliation as, let's give you a minute to read through the choices. So the first thing we have to do is note that $74 minus 40, oops, let's go back to that, sorry about that. $74 minus $47 is $27. So these amounts here are just to confuse us. So this is a disbursement, okay? And the correct amount is 74 and we only recorded 47. So we need to add, to deduct this $27. So we need to deduct it from the bank balance because it is a disbursement. So in here, since we recorded it as 47, we need to add the original, we need to continue to deduct $27 to make sure that this is correct. So $27 is deducted from the balance per the books. Now let's go on to some journal entries. So here, a bank statement included an NSF check from a customer, Kim Fields, for $2,100. So what journal entry would we need to record this reconciling item? So first and foremost, we have to know when we recorded this cash receipts, right, of $2,100, we debited cash for $2,100 and we credited accounts receivable for $2,100. So now what we're basically doing is reversing this entry because there was an NSF. So in that case, we are going to debit accounts receivable for $2,700 and we're going to credit cash because we never got it for $2,700. So the easiest way to solve this is to know what we did originally in recording the entry and then what we need to do in our bank rec to show the NSF. So hopefully you're debiting accounts receivable and crediting the cash for $2,100. Now let's go on to another type of journal entry. So here, if a bank statement includes an EFT receipt of $200 for interest, the journal entry to record that reconciling item should include what? So here we're getting a receipt. So that's a cash receipt of $200. So that means we're going to debit cash because that cash increases on the debit for $200. And it is telling us this is for interest that we are receiving. Therefore, our credit is going to be interest revenue for $200. So hopefully you came up with the last choice, debit to cash for $200 and a credit to interest revenue for $200. So now we are looking at a lot of information regarding a bank balance, right? So when we do that, we need to note that our adjusted bank, so first they're telling us here our adjusted bank balance at August 31st. So in order to solve this problem here, we should go and actually do it in Excel. So let's get out of this and do that problem in Excel. So please go ahead and do that